Arthur Vance carried the manila folder like it contained a Declaration of Independence. Inside was a single cashier's check for $1,420.67. It was Tuesday, October 12th, and for Arthur, this was the end of a 30-year marathon. He was 62 years old, his hair entirely silver, and his hands calloused from decades of working as a local diesel mechanic. 30 years ago, he had signed a contract with First National Trust to buy a modest, 3-bedroom brick ranch-style home on the outskirts of town. He had never missed a single payment. He had survived corporate layoffs, sky-high interest rates, and the 2008 financial crash by sacrificing everything else. Today, he was walking into the local branch of Horizon Global Bank, the multinational conglomerate that had acquired his original mortgage lender 15 years prior, to make his final payoff payment. He wanted to do it in person. He wanted to look another human being in the eye, hand over the money, and watch them stamp his account as paid in full. He walked up to the teller counter, his chest filling with a profound sense of relief. A young teller named Sarah smiled at him from behind the bulletproof glass. Arthur slid the folder across the counter, along with his monthly statement and his driver's license. He told her he was there to make his final mortgage payoff. Sarah nodded, her fingers dancing across the mechanical keyboard as she pulled up account number 4099EXT86. For a moment, the only sound was the soft humming of the branch's fluorescent lights. Then, the typing stopped. Arthur watched Sarah's expression shift from polite professionalism to deep confusion, and then to a visible, cold discomfort. She squinted at the monitor, clicked her mouse repeatedly, and then looked up at Arthur. Her smile entirely gone. She told him that she was sorry, but she could not accept the check. The computer system would not allow her to process a final payoff because his account was flagged as being inactive, severe default. Arthur laughed, assuming it was a joke or a minor system glitch. He told her that was impossible, pointing out that his automatic monthly payments had cleared every single month since 1996. But Sarah wasn't laughing. She turned the monitor slightly toward him, though the polarized privacy screen blocked his view. She explained that according to the system's underwriting data, there was an outstanding, unresolved secondary liability attached to the property's deed dating all the way back to 1986. The system indicated that until this prior liability of $42,000 was settled with accrued interest, the primary mortgage could not be legally discharged. In fact, because the main loan term was ending today and this secondary balance remained unpaid, the automated system had automatically generated a notice of technical default. Arthur's heart dropped into his stomach. The air in the bank suddenly felt freezing cold. He demanded to speak to a manager. Minutes later, he was sitting in a small, glass-walled office across from the branch manager, a man named Mr. Henderson who wore a sharp suit and an expression of practiced, corporate empathy. Henderson reviewed the digital file on his screen, rubbing his chin. He told Arthur that Horizon Global Bank had inherited the loan portfolio of First National Trust during a series of mergers in the early 2000s. When those legacy accounts were digitized and integrated into Horizon's modern automated risk management software, the system flagged a historic, uncollateralized encumbrance. Specifically, a secondary line of credit had been opened against the property in July of 1986 by the home's previous owner, a man named Richard Vance, Arthur's late uncle. Arthur explained, his voice shaking with rising anger, that when he bought the house from his uncle's estate in 1996, the title company had conducted a full search. They had declared the title completely clean and marketable. He had been paying his primary mortgage faithfully for 3 decades based on that legal guarantee. Henderson sighed, sliding a printed document across the desk. He explained that title companies make mistakes, and more importantly, banking laws regarding recorded liens have strict statutory periods. According to the document, the 1986 lien was never officially released with a satisfaction of mortgage stamp from the county recorder. It had sat dormant, like a financial time bomb, hidden deep inside paper archives. Now, because Horizon Global Bank's automated compliance software was auditing all expiring 30-year loans, the ghost lien had been resurrected. Because it was a senior encumbrance, the bank legally could not execute a clean release of Arthur's deed. Arthur stared at the paper. The numbers didn't make sense. The original 1986 debt was $42,000, but with 40 years of compounded interest, late fees, and corporate tracking penalties calculated by the bank's software, the total amount Horizon was demanding to clear the title was now over $218,000. More than the original purchase price of the entire house. Henderson told him that if this balance was not resolved within 30 days, the bank's automated foreclosure protocol would trigger, as the property could not remain in an uncollateralized, expired loan state. Arthur stood up, his legs trembling, the final cashier's check still clutched tightly in his fist. He realized he wasn't dealing with a human being who could see reason. He was dealing with a faceless, algorithmic machine that was preparing to steal his life's work over a clerical error older than the teller who had refused his payment. He walked out of the bank into the blinding afternoon sun, knowing his 30-year celebration had just become a fight for his survival. Arthur didn't drive straight home. Instead, he sat in the cabin of his old Ford truck in the bank parking lot, staring at the steering wheel until his breathing slowed down. His mind was racing through the legal and financial logistics of his situation. He was a mechanic. When an engine failed, you didn't curse the machine, you tore it down to find the broken component. He needed to find the breakdown in this paperwork. He drove directly to the county courthouse, a historic stone building downtown that housed the registrar of deeds. If a lien truly existed on his property, it had to be recorded in the public ledger. He spent the next 4 hours under the dim, buzzing lights of the records room, assisted by a sympathetic clerk who helped him pull the microfiche archives and physical tract indexes for his parcel of land. What Arthur discovered inside those dusty volumes was a dizzying web of corporate musical chairs. The original 1986 secondary loan had been issued by a regional institution called Apex Savings and Loan. The paperwork showed that his uncle, Richard Vance, had taken out the $42,000 equity line to repair the property's roof and foundation after a severe storm. However, just 2 years later, in 1988, the savings and loan crisis swept across the country. Apex Savings and Loan collapsed overnight. Its assets were seized by the federal government under the Federal Deposit Insurance Corporation and subsequently sold off in bulk portfolios to a larger entity called Sovereign Trust. Sovereign Trust operated for less than a decade before it was swallowed by First National Trust, the very bank Arthur had signed his primary mortgage with in 1996. Arthur traced the chain of title line by line, his eyes straining against the blurry green glow of the microfiche reader. In the 1996 closing documents, his title insurance company had noted that all prior debts from the Richard Vance estate were to be paid out of the escrow funds from the sale. There was a recorded line item showing that a wire transfer had been sent from the closing attorney to First National Trust to satisfy the old Apex equity line. The money had left the escrow account. The debt had been paid. However, as Arthur looked at the final page of the 1996 recording entry, he noticed the fatal flaw. The closing attorney had filed the new deed in Arthur's primary mortgage, but they had never filed a formal satisfaction of mortgage or release of lien for the 1986 Apex loan. It was a catastrophic administrative oversight. Because First National Trust was managing both the old asset portfolio and Arthur's new loan, a clerk had simply pocketed the payoff money, cleared it on their internal ledgers, but failed to record the physical paperwork with the county. To the outside world, and to any automated database, that 1986 lien remained an open, active encumbrance on the property. Then came the final complication. When Horizon Global Bank purchased First National Trust in the mid-2000s, they didn't review physical files. They bought a digitized database. The internal ledger showing the 1996 payoff was lost or archived in an incompatible format, while the unreleased public lien at the county courthouse remained fully visible. To Horizon's modern, cold-blooded risk assessment algorithms, Arthur's home appeared to have an unresolved senior debt that had been compounding interest at an aggressive penal rate for 4 decades. Arthur arrived home long after dark. The house felt different now, less like a sanctuary and more like a target. He spread the photocopied deeds, assignments, and corporate merger timelines across his dining room table, illuminating them with a single desk lamp. The contrast between his reality and the bank's digital reality was terrifying. He had a receipt showing the money was paid in 1996, but the bank had a recorded legal instrument that technically outranked his own mortgage. In the eyes of property law, an unreleased lien stays with the land, regardless of who owns it or how many times it changes hands. He was trapped in a bureaucratic twilight zone where a 30-year-old clerical mistake by a dead attorney at a defunct bank could strip him of everything he owned. The next morning, Arthur began making phone calls, trying to reach a human being within Horizon Global Bank's loss mitigation department. He spent hours on hold, transferred from automated menus to offshore call centers, and then to low-level processors who could do nothing but read the script on their screens. Every representative told him the same thing: the system showed a balance due of $218,000, and the system could not be manually overridden. They didn't care about his 1996 escrow receipts. They didn't care that Apex Savings and Loan hadn't existed for nearly 40 years. The corporate machine was moving on an automated track toward foreclosure, and no one he spoke to had the authority or the desire to pull the brake lever. Arthur realized that logic and documentation weren't going to save him. He was going to have to fight them in a language they actually understood. On Monday morning, exactly 11 days after his final payment was rejected, Arthur received a certified mail packet. It was a formal notice of intent to foreclose from Horizon Global Bank's default litigation division. The language was cold, dense, and absolute. It referenced California Civil Code provisions regarding non-judicial foreclosures, stating that if the total accelerated balance was not paid in full within 19 days, a trustee's sale would be scheduled. The bank wasn't just refusing to release his deed, they were actively preparing to sell his home at auction on the courthouse steps. The automated algorithm had calculated that the equity in Arthur's fully paid-off home was highly lucrative. Because the property value had risen significantly over 30 years, seizing the asset would net the bank a massive profit, completely wiping out Arthur's lifetime of hard work. Realizing he was completely outmatched, Arthur took his box of records to a small law office downtown. The sign on the door read Elena Vance and Associates, Real Estate and Property Law. Elena wasn't related to Arthur, but she had a reputation in the county for being a sharp, relentless consumer advocate who hated big banks. She sat across from Arthur, reviewing the chaotic mountain of microfiche printouts, escrow receipts, and corporate merger timelines. She didn't offer false hope. Instead, she explained the brutal reality of the modern banking industry. When large financial conglomerates buy up legacy loan portfolios, they often employ third-party software programs designed to actively scour old databases for unreleased liens or technical discrepancies. It was an intentional, highly predatory revenue strategy. Elena pointed out that Horizon Global Bank wasn't making a mistake, their legal department knew exactly what they were doing. By enforcing a 40-year-old unreleased lien from a bankrupt savings and loan, they were exploiting a structural gap in property recording systems. Under traditional real estate statutes, a recorded lien remains a cloud on the title indefinitely unless a quiet title action clears it or a formal release is recorded. Horizon's legal strategy relied on the fact that most working-class homeowners could not afford the thousands of dollars in legal fees required to fight a multi-billion-dollar bank in civil court. They expected Arthur to panic, default on the timeline, and allow the automated foreclosure process to roll over him without a fight. However, Elena noticed a critical flaw in the bank's strategy. She pointed to the notice of intent to foreclose and compared it to the corporate chain of title Arthur had retrieved from the courthouse. Horizon Global Bank was claiming ownership of the 1986 Apex Savings and Loan debt through a series of blanket asset assignments. But during the chaotic banking collapses of the late 1980s and early 1990s, many of those bulk portfolio transfers were executed poorly. Banks frequently failed to record individual assignments for every single property in local county registries, relying instead on massive, unrecorded corporate schedules. Elena looked at Arthur, a sharp glint in her eye, and explained that under state law, a party cannot foreclose on a property unless they can prove a continuous, unbroken chain of written assignments linking them directly to the original creditor. That same afternoon, Elena drafted an emergency motion for a temporary restraining order to halt the impending foreclosure sale. She argued that Arthur would suffer irreparable harm if his primary residence was auctioned off while a legitimate dispute over the validity of the underlying debt was pending. She also filed a comprehensive civil complaint for a quiet title action, demanding that Horizon Global Bank produce the original, wet ink promissory note and the specific individualized assignment documentation proving they actually owned the 1986 Apex lien. She was forcing the corporate giant to leave its automated digital fortress and step onto a real courtroom floor where rules of evidence applied. 2 days later, Arthur stood beside Elena in a local circuit courtroom. The bank's local counsel, a young, overworked contract attorney from a massive regional foreclosure firm, appeared via a video monitor, holding a thin manila folder. The bank's attorney argued aggressively that the unreleased 1986 lien was a matter of public record, that the debt remained unsatisfied on its face, and that Arthur's 1996 escrow receipt was irrelevant because it didn't bear a formal county recording stamp. He demanded the judge dismiss the case and allow the foreclosure sale to proceed, arguing that the bank's internal computer records were sufficient proof of debt. The judge, a no-nonsense veteran jurist named Judge Harrison, looked at the digital records presented by the bank, then looked down at the meticulously organized physical timeline Elena had compiled. Judge Harrison asked the bank's attorney a single, direct question: does your client possess the original promissory note from 1986 signed by Richard Vance, or a recorded assignment linking Apex Savings and Loan directly to Horizon Global Bank for this specific parcel? The bank's attorney stammered, admitting they only had an electronic database entry. Judge Harrison slammed his gavel down, granting Arthur's temporary restraining order and halting the foreclosure. He ordered both parties to enter full legal discovery, forcing the bank to dig through its physical corporate archives to prove their claim. Arthur had won the first battle, but Elena warned him that the corporate machine would now bring its full legal weight to crush them in the next phase. The discovery phase of the lawsuit turned into a battle of attrition. For 3 months, Horizon Global Bank's corporate defense firm flooded Elena's small office with thousands of pages of unorganized, digitized legacy files. They dumped data from 4 different bank mergers, hoping to bury the lone attorney under a mountain of administrative noise. It was a classic corporate litigation tactic: make the process so expensive and exhausting that the working-class plaintiff runs out of money to pay their lawyer. But Arthur wasn't a stranger to hard work, and Elena wasn't intimidated by large firms. Together, they spent nights in her office, drinking black coffee and sorting through the digital data dump page by page, looking for the missing link in the bank's chain of custody. The turning point came during the deposition of Horizon's corporate representative, a senior risk analyst named Marcus Vance, no relation to Arthur. The deposition took place in a sterile conference room on the 12th floor of a downtown office building. Marcus Vance sat confidently across the table, flanked by 2 high-priced corporate defense lawyers. He testified under oath that the bank's automated risk architecture was flawless. He maintained that when Horizon acquired First National Trust, they legally inherited all active assets, including the unreleased 1986 Apex line of credit. He asserted that the electronic ledger entry was a verified corporate record, which under federal banking rules carried a legal presumption of accuracy. Elena sat quietly, letting the corporate representative dig his own hole. Once he had fully committed to the absolute accuracy of the bank's digital records, she reached into her briefcase and pulled out a certified, stamped document she had obtained from the Federal Deposit Insurance Corporation Historical Archives in Washington, D.C. It was the original liquidation schedule from the 1988 collapse of Apex Savings and Loan. Elena slithered the document across the table. She directed the representative to page 47, Schedule C. She asked him to read the specific line item corresponding to his uncle Richard Vance's loan file. Marcus Vance adjusted his glasses, his confident posture stiffening. The document revealed that when the federal government liquidated Apex Savings and Loan in 1988, Richard Vance's secondary equity line was actually flagged as a non-performing asset with a $0 value and was completely excluded from the bulk portfolio sale to Sovereign Trust. The federal government had essentially written the debt off as uncollectible decades before Arthur ever bought the house. Therefore, Sovereign Trust never owned it, First National Trust never owned it, and Horizon Global Bank had absolutely no legal right to collect it. The corporate defense attorneys immediately objected, trying to claim the document was unauthenticated, but Elena was ahead of them. She produced a second certified record from the state archives, the physical ledger from the 1996 real estate closing. It proved that the money Arthur paid into escrow had indeed been transferred to First National Trust to clear any lingering administrative clouds, but because the underlying debt had already been legally extinguished by the federal government in 1988, First National Trust had simply absorbed the funds into their general revenue account instead of filing a formal satisfaction piece. The entire $280,000 balance Horizon was demanding was based on a digital ghost, an automated algorithm calculating interest on a debt that had legally ceased to exist 38 years prior. Elena leaned forward, looking directly at the corporate representative. She asked him if he could produce a single piece of paper, bearing a real signature, showing that the federal government had ever assigned the Richard Vance loan to Horizon or any of its predecessors. The room fell completely silent. The corporate representative looked at his lawyers, his face pale. The lawyers looked at the FDIC documents, realizing their entire defense had just collapsed. The bank didn't own the lien, they were enforcing an unverified database entry that their automated software had blindly turned into a predatory foreclosure mechanism. Elena ended the deposition right there, knowing she had enough evidence to move for an immediate summary judgment. 2 weeks later, Arthur and Elena returned to Judge Harrison's courtroom for the final hearing. The bank's high-priced defense lawyers were no longer arrogant. They attempted to offer a quiet settlement, promising to release the lien if Arthur agreed to drop his counterclaims and sign a strict non-disclosure agreement. Arthur looked at the men in the expensive suits and firmly refused. He wanted a public record of what they had done. He wanted a judge to tell them that a machine cannot steal a man's home based on a corporate lie. As the hearing began, Elena presented the deposition testimony and the historical federal archives, laying out the absolute failure of the bank's chain of title. The bank's legal team could offer no rebuttal, their automated system had finally run into the unyielding wall of physical, historical truth. Judge Harrison did not take long to deliberate. He sat at his elevated bench, reviewing the deposition transcripts and the certified federal records one final time. When he looked up, his expression was austere. He focused his gaze entirely on the bank's legal team, who sat with their heads lowered, their previous corporate posture completely deflated. Judge Harrison stated for the record that the court found Horizon Global Bank's actions to be not only legally unsupportable but deeply reckless. He noted that the banking system's heavy reliance on automated algorithms to enforce ancient debts without human verification was a systemic hazard to everyday homeowners. With a decisive strike of his gavel, the judge issued a summary judgment in favor of Arthur Vance. He ordered an immediate, absolute quiet title decree, legally erasing the 1986 Apex savings and loan lien from the county registry forever. The cloud on Arthur's property was officially destroyed. But the judge wasn't finished. Under state consumer protection statutes regarding unfair and deceptive business practices, Judge Harrison awarded Arthur statutory damages, ordering Horizon Global Bank to pay all of Elena's legal fees, along with an additional $50,000 for the emotional distress caused by the fraudulent foreclosure threat. Arthur sat at the plaintiff's table, his shoulders dropping as a wave of pure exhaustion and relief washed over him. He looked down at his hands, realizing they were no longer shaking. The 30-year marathon wasn't just over, he had defended the finish line against one of the largest financial institutions in the world. The corporate lawyers scrambled to pack up their leather briefcases, eager to escape the courtroom and file their internal reports detailing how an automated revenue stream had backfired into a costly legal defeat. 1 week later, Arthur walked back into the local branch of Horizon Global Bank. He didn't bring a lawyer this time, and he didn't bring a box of documents. He walked straight up to the counter where Sarah, the young teller, was working. She recognized him instantly, her eyes widening slightly as she remembered the tense confrontation from a few months prior. Arthur smiled warmly, opened his manila folder, and slid the exact same cashier's check across the counter, $1,420.67. Sarah pulled up account number 4099 EXT 86. This time, there were no red flags, no automated alerts, and no administrative blocks. The system had been manually purged by corporate compliance per the federal court order. She processed the payment, the mechanical keyboard clicking softly in the quiet lobby. A moment later, the validation printer whirred to life, stamping the document with a single, beautiful phrase, paid in full. Account discharged. Sarah handed the receipt back to Arthur, her smile genuine this time. She congratulated him on owning his home. Arthur walked out of the bank and stood on the concrete walkway, looking up at the sky. He drove back to his 3-bedroom brick ranch house, parked his truck in the driveway, and walked up the front steps. For the first time in 40 years, the dirt beneath his boots, the brick walls around him, and the roof over his head belonged entirely to him. No algorithms could threaten it, no corporate mergers could erase it, and no ancient errors could steal it. He was finally a completely free man, standing on his own sovereign ground.